Let's discuss the stock of Faraday Future, which recently skyrocketed by 10,000%. We'll look at what might happen next. We'll definitely analyze volatility to understand what's going on. Additionally, we'll examine the trading volume of options and the reasons behind such a drastic movement. Most importantly, we'll look at market forecasts to understand what the market predicts. Let's start from the beginning. This company is involved which manufactures electric vehicles. The company was founded by Jia Yueding in May 2014 and is currently operating at a loss with no upward movement. We see a small revenue of $500,000, and that's it for now. What happened? First, let's analyze the volatility. Currently, volatility ranges from 250% to 600%. As we know, volatility varies on different dates and expirations and different strike prices. This is a normal characteristic of options. Typically, the closer the strike price, the higher the volatility. The same applies here. The company has grown significantly, so the volatility has also increased dramatically. Now let's look at the volatility smile. We see that the volatility smile is a straight line. Although the volatility varies with different dates and expirations, it generally forms a flat line. This indicates that investors and traders are not particularly biased towards a specific direction. Volatility is the same for both increases and decreases. Next, let's examine historical and implied volatility. The numbers are extreme volatility is very high, but the company is also very small. We see that historical volatility, the gray line, and implied volatility, the white line, are nearly the same, which is a normal situation. Additionally, remember that you can trade not only the stock itself, but also its volatility. Now, let's look at the options trading volume. What's happening? We see a very high volume concentrated at the $1.50 5 for call options. For put options, there is a high volume concentrated at the $0.50 5. Also, let me remind you why this incredible movement happened. In this company, there was a very high percentage of shorted shares. At the moment when it was indicated that they might not be able to remain listed on the exchange due to not meeting the criteria, the stock began to surge. This was partly due to traders closing their short positions, leading to a short squeeze. But beyond the short squeeze, there was also a gamma squeeze. Let me explain how this works with options. It all started quite simply. At some point, someone started buying options. Investors and traders buy options. And on the other side, we have market makers who sell these options. When the stock price starts to rise and a market maker has sold call options, they need to hedge their unlimited risk. They do this by buying the underlying stock according to the delta. This is called delta neutral hedging, a standard strategy. As the stock price rises, the delta also increases. When delta increases, the market maker is required to buy more stock according to their strategy. This creates a feedback loop. Combined with the closing of short positions and the actions of market makers, this led to an incredible increase in the stock price, resulting in a 10,000% surge. If you had invested $10,000, you would have become a millionaire. It sounds unbelievable, but catching such a move is extremely difficult and often depends on luck, in my opinion. So due to the market makers and the short squeeze, the stock experienced a phenomenal upward movement. What will happen next? The company was supposed to submit a report but hasn't done so yet. It's possible they might submit it today. Given the company's apparent poor condition, there is a significant chance it might go bankrupt. Short squeezes often occur just before a company declares bankruptcy. Currently, the stock is dropping by nearly 40%, which is a serious decline. Let's examine the 3D volatility. Here, we concentrate all the information about expiration dates, strike prices, volatility, and more. Professionals often use this graph to understand the dominant scenario. Again, we see that the volatility is at its peak and skewed, indicating higher volatility at closer strike prices. The volatility here is extremely high. This chart doesn't promise us anything good, of course. Now let's look at the most important thing, which is the market forecast. Again, this forecast is calculated by the market based on derivatives, based on options. All the information currently available is embedded here. I wouldn't advise you to neglect this information because going against the market can have very serious consequences. So for mid-June, the market is predicting that the stock will be worth between $0.50 and $1. This means that most likely, within a few weeks, the stock may drop further. At least this is what the market is indicating, with a 50% probability being the highest probability. But if we look, for example, at August, mid-August, the probability remains the same, at 37%, that the stock will be worth between $0.50 and $1. If we look at January 2024, it's the same story, with a 33% probability that the stock will be worth between $0.50 and $1. What can be said about this? First, of course, there aren't many options being traded here, so the market forecast might not be very accurate because the company is very small and few people trade it. But again, at least for now, the market, through derivatives, does not expect any incredible collapse. The market is not currently indicating a bankruptcy scenario, but this can all change when the company makes any announcements. I wouldn't draw any definite conclusions here. In general, I want to immediately say and warn that this company is very risky. I do not have it in my portfolio, and I would never add it anywhere, in principle. I remind you that I am starting a new portfolio from scratch, and there I explain which stocks I would buy. I will also talk about which stocks I will not buy and do not recommend anyone to buy. And this is one of those companies. I wouldn't buy it, And again, many people might not like this opinion. Why wouldn't I buy this stock? It has to do with the mathematics of probability theory. The risk-reward ratio is not in the investor's favor, plus the company is very risky. It's better to buy a more expensive stock like Microsoft or Meta than to buy a nearly bankrupt company. Again, this is not my style. Yes, of course, you could have made a lot of money here if you had invested all your money, but it's very, very hard to predict here. There's a big temptation, for example, to create a portfolio and load it with openly junk companies at 1% each. Some might hit and double the portfolio. Yes, there are such strategies, but I actually have a different strategy for making money, like outperforming the S&P 500. In fact, there are many strategies. There are strategies for catching such stocks. This is also interesting and can work, but again, it's very risky. It requires a unique style and emotional support. You must be prepared to lose everything. But again, any strategy that makes money works, and assembling a portfolio of such companies can also work. Let's see if this company will be delisted from NASDAQ or not, because that's a significant risk. We'll also see if this company will report earnings or not. But in my opinion, such a move upward is unlikely to be repeated because a lot of short positions have already been closed. Yes, of course, if the company comes out now and says that everything is developing profitably, the stock might grow, but it's too risky. Again, in my opinion, I wouldn't buy this stock right now, and I wouldn't even short it, because that's also dangerous. If we look at the volatility, it's extremely high, so insurance hedging would be very expensive. Shorting this stock outright is very risky. If you're unsure of what to do, you can simply stay away from it. You might not make money on this stock, but the most important thing is not to lose money. Also, I'd like to remind you that I've started a new experiment where I'm building and creating a portfolio from scratch. There I explain which stocks I will buy and why I will buy them. Anyone can follow my portfolio. It's all completely transparent and free. Good luck to everyone.